So let's get to KG on some of these top headliners, see what is driving the price action. And let's start with crude, because we, of course, are tracking Trump's lines this morning about a blockade of these Venezuelan oil tankers. Just talk us through the significance of that story and the impact we're seeing on the markets this morning, KG.
Yeah, you are seeing crude up about 1.3% so far. We actually did see it pull back here a tad bit. I mean, the supply glut narrative that's taking place in the market right now has really put a little bit more downward pressure on crude oil than the expectation that geopolitical risk or logistical risk could actually cause maybe a little bit of a disruption. But you are seeing a little bit of a bounce back. That $55 level obviously key after breaking 57.5. And this is after President Trump's comments around a blockade for these sanctioned Venezuelan tankers. Now, if you're kind of looking at marine traffic right now, there's between around 20 or 30 of these tankers kind of around Venezuela at the moment. So over the next couple of days, we will see how serious this matter is going to be. We already have taken over a couple of these tankers at the moment, but is there going to be an escalation for a little bit more? Now, if you're looking at the overall production for Venezuela, they produce between 750,000 to around 950,000 barrels of oil per day. Around 80% of that's going out to China. So this will have an immediate impact on China if we do enforce this blockade. And we also do import Venezuelan oil even still right now, because Chevron does have some operations within Venezuela. So could this have an immediate impact on logistics? It could. But if you're looking at the longer term impacts, let's say even 1 million barrels coming offline on a global scale, especially heavy sour, there is reported capacity, especially if you're looking at OPEC Plus, to be able to compensate for that over the long term. So catching a little bit of a bid right now, but is this going to be the story that really rockets oil to $85 or $90 just based on this alone? Seems highly unlikely, just given the supply fears that have been placed in the market. But once again, could be the start of a catalyst. If you do see maybe some retaliation from other countries like Iran, which also will be impacted by this, and they start actually taking over tankers within the Strait of Hormuz, that's where you start seeing this escalation kind of moving a little bit more, and that's where you could see prices elevated here. So geopolitical risk premium coming back into the market here doesn't seem like it's enough to really try to wake up oil, at least for the moment. But who knows? This could escalate fairly quickly.
So what's the outlook for oil then, moving into 2026, KG? Because as you say, a little bit of a geopolitical risk premium being injected into obviously markets right now. We had some softer data out of China earlier this week that seemed to sort of move the needle somewhat a little bit. But obviously we continue to keep the tabs on the lines coming out of peace talks regarding Ukraine and Russia and everything else that's going on. What's your read? What's your pulse check on where we see prices going into next year?
Yeah, I mean, obviously prices right now are pretty depressed. There's something called a crack spread, which really tries to measure the profitability of refiners here processing oil into 3 barrels of oil into 2 barrels of gasoline, 1 barrel of diesel. Those have actually been fairly healthy. They have been coming down here a tad bit over the last month or so, and that's going to put pressure on those refiners. And so if you're kind of looking at the equity front, you probably would see maybe a little bit more headwinds to start off the year. But we are seeing, once again, those byproduct prices coming down, and that could also then encourage a lot of these refiners to pull back on capacity, which could stabilize prices. Probably at first, especially in January and February, the demand picture doesn't look that great. You do have some supply side risk, with the Balkan region, maybe an Arctic blast that actually hits the United States that could push oil prices higher. But eventually, a lot of these oil companies and exploration companies probably will pull back on production, tighten up supplies here a tad bit, and you could potentially see a little bit more of a rally for oil in the summer months as well as the fall months. So usually when a commodity like oil or energy just in general, when it's really depressed at these current levels, it's not really that hard to kind of re-rate prices higher once the supply story kind of gets fixed up here. And so I would look at, second half of next year, oil getting a little bit more bullish than what it is right now.
Okay, and we're seeing a newcomer to the market today on the NASDAQ, Medline, which is certainly a fascinating story because, of course, it is in the business of medical products, which is something that we've been keeping a lot of tabs on with respect to, obviously these companies being hit by tariffs over in places like China, Asia, broadly speaking. No doubt this is all part of, efforts to, I guess, broadly to onshore, try to, bring some of that manufacturing back home, try to obviously have some of this stuff made here in the US. I guess that's where they're hoping going to try to raise some of this money to put towards. What are you seeing out there as far as this one?
Yeah, so the company has raised over $6.26 billion for this IPO. It's going to IPO on the NASDAQ, and as you talked about, it's not really a sexy name. It's nothing that's in technology or anything of that nature. It's medical supplies. If you're looking at surgical equipment, gloves within the medical field, as well as other items as well. But it has been able to raise a significant amount of cash here, and it's going to be able to pay down maybe some existing debt in order to build out some of the infrastructure here in the United States. Now, it is a competitive business. They do have some competitors like McKesson as well as Cardinal Health within this space, but just kind of reflects the fact that the appetite for IPOs, especially on the retail front and institutional front, is still fairly healthy. We have seen some pretty large IPOs this year, and a lot of analysts are expecting that that's going to increase and continue when it comes to the enthusiasm for next year. So let's see how this offering does take hold. It has been a couple of adjustments over the last 24 hours when it comes to this IPO. It does appear that they are expanding the amount of shares being offered, but also then kind of regulating or going to the lower or middle end of the range when it comes to the pricing here. So let's see how this actually does resolve itself. It's not a technology name. I don't think the market's really expecting a 40%, 50, 60% move once the IPO hits. But this does once again kind of show that there's demand out there for raising capital. And this could also be a little bit more of an insight into the financial space as well. Goldman Sachs, those that kind of bring a lot of these IPOs to market, could actually see that deal flow increase next year. It could be a tailwind for their earnings as well.
And one big name, obviously, we're going to be looking at this afternoon is Micron. Obviously, we know what the analysts have been saying, going into this. Obviously, we know what this company is in the business of. You only have to look at the Samsung, the SK Hynix's numbers to see that, we're probably likely to see some follow through as far as, some fairly solid gains here. But I'm just wondering, as we look across the space, today the price action, KG, I mean, you've got Seagate up, you've got SanDisk up over 4%. I mean, Micron is sitting at 1.4% right now. Morgan Stanley out with a really interesting note on Seagate, actually, suggesting underweight stocks with elevated memory exposure like Dell, HP, increasingly more cautious on memory exposed names. They're also talking about memory inflation becoming the key risk variable moving into 2026. As we get these numbers and we think about the bigger picture now, what sort of themes we should be thinking about and how investors should be approaching this story across the whole space, what should we be watching given some of Morgan Stanley's notes out this morning?
Yeah, so memory is still a cyclical business. I think it has not been able to kind of enjoy the rally for artificial intelligence like an NVIDIA or an AMD, but now you are seeing a little bit more value being put into this sector or this industry, if you will. Going into this earnings announcement, I think what's going to be key, obviously the demand for high bandwidth memory, which has really kind of been on the forefront for Micron. Still a smaller portion of their business, but it continues to accelerate, so that would be a positive sign for them. But I think when you look at the stock price and the run-up, I think the market also kind of forgets that it is a very commoditized business. A lot of competitors within the space as well, and that could also push prices down in the longer term. Now, in the intermediate term, we do know that memory inflation is taking hold here. We have seen that and heard that on several different conference calls, but I'm not sure if this is going to be something that's going to last as far as a cycle for 1 year, 2 years, or even 3 years for that matter. The last thing about Micron, do they actually have capacity to meet the demand? That was actually an issue for them about a year ago when they started seeing an uptick when it came to orders, but their CEO came out and said, look, we have the demand out there, but we just don't have the capacity to meet it. If you don't have the capacity to meet the demand, guess what? You can't realize revenue. And so it's going to be a balancing act for them to kind of show that demand is still there, but they are going to spend money on expanding their capacity. And I think it's going to be something to watch. And I'm not sure if this is going to be a huge mover for the overall semiconductor space as a whole, though.
Okay, good to know. A tricky needle to thread with some of the demand and supply we're seeing in these chip space, but particularly with some of the memory names as well. Thanks so much for that, KG. I'll speak to you a bit later on.